Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Wednesday. It's October 31st, 2012. We're looking at the U.S. markets now that they're open. They've been closed for Monday and Tuesday the past couple of days due to Hurricane Sandy and the tropical storm that happened hit in New York. And they're actually, open now, but it's still going to be light volume because there's so much chaos going on over there. Hearts and prayers are with those people as they deal with that. Looking at the U.S. markets here, you're not going to see a lot of change from one video on Friday to what we're seeing on Wednesday today. We've just basically been moving sideways for the past 4 days here, and we don't actually see this as a good buying opportunity. This market activity here we talked about in the past, you've found this bottom before, this support line, and from that point over here, you rallied up there and you hit a wall, you hit resistance and you sold off, you tested it again, you failed again, you pulled back lower, you tried it again, you failed yet again. Now to come back down here in theory to look at this and say, okay, I think we're going to come up here and break out. I don't see that. You already tried that over here, didn't work out. So this sideways activity, you got a couple different options that can play out. The one I'm hoping for is this move here, and then we roll over and we start to go lower. That would give us a much larger bearish formation of a head and shoulders formation. If we look at this, has been the first shoulder, this overall pattern here being the head, this would then be the shoulder, the second shoulder formation. That'd be very bearish for the overall markets. And if you watched the video I talked about last week, I said that I see the Dow Jones Industrial Average is having another 1,000 points to the downside there. That's an important piece of the puzzle there. And if we were to get this little pattern here, I'd like to short it at that main level there at the 50-period moving average. That's where your best short opportunities are whenever you're in a downtrend, which we are clearly in. You can note by the low points here, lower than the previous, high points also lower than the previous. Let me clean that chart up. One other scenario that may play out here, and I'm kind of hoping it doesn't, but it may. We've been moving sideways, right? And this is quite normal here. If we continue to move sideways and people are not willing to drive us a little bit higher before we break down, that means everybody sees this level here as resistance, and so they're not going to drive it up there. No one's foolish enough to buy into that. If that's the case, then we'll move sideways for a little while and then we'll just drop off like this. So the first leg here would be leg one. We'd see the sideways moving activity and then expect this distance doubled out here. So expect it to just continue to fall and crash and go much lower. Well, hopefully we would see that setting up and we take advantage of that. Right now it's not really clear how that would break down, so we'll keep an eye on it. We haven't taken a position here yet. If we get a jump up here, I'll be shorting it. If we break down below this low, I'd probably be shorting it as well. There is no case scenario where I'd be a buyer. Quick glance here at the NASDAQ. This one I'm not short at the current point in time, and I wouldn't short until we actually got a bounce here. I'd like to see if this little support line that we had, previous neckline here, the head and shoulders formation there, I would like to see a bounce come up here and find resistance at that level. So if we were to get a little bit of a move here, I could take a short position at that point in time. Right now, down here trading at the 200-period moving average with hammer candlestick formations, I don't see a great opportunity to go short here, not with little risk. So I'm just going to leave this one alone for now. The Russell 2000 Small Cap Index gave him a little bit today. I can see people probably attempting to buy this little hammer candlestick formation, bouncing off the 200-period moving average. The following day gave you an up day. However, you'll notice the high today was not higher than the previous day, so it wouldn't be confirming a buy signal there. And anyone who's attempting to buy this is basically going against the overall markets, which are actually breaking down. So I think you have a high risk trade there, and I wouldn't be messing with it. Personally, I'm going to sit back and wait. If we do get a bounce up here, I'll be looking for a short opportunity. Again, keep an eye on the ultimate oscillator currently at 50. You only get 50, 60 in some cases before you roll on over again. You've seen that in the past. So I wouldn't be looking at this as a great buying opportunity. You're not down below the 30 line here, so I wouldn't be looking for a bounce as being mandatory. You could continue to move sideways and just continue to break down as well here. So nothing I would want to buy, but I will keep an eye on it for potential short opportunity if we get a bounce. Quick look here at the SPX, the S&P 500. Same overall story as the Dow Jones Industrial Average, different ways it can trade out. Basically, we've been moving sideways for the past few days here, 4 days, and we see today's activity showing no more decision by traders than we have been seeing for the past few days. In fact, This signal basically shows indecision. They don't know which direction to go in this market. Right now, that's not a situation we want to be a buyer. We talked about the same thing that I told you about the Dow Jones Industrial Average overall chart pattern applies here. You could be seeing the first shoulder formation here, the head formation here, and then a second shoulder formation up to this level. Typically, you'll find the shoulders will peak at roughly the same level. So you can see the previous peak was here. Let's draw a line out that way. You can see that it's basically in line with the 50-period moving average, which is where you'd want to be looking to go short in the fact that you're in a downtrend. Note the high point here, getting lower every time. Here. This is where you want to be shorting. Your best short opportunities will be at the 50-period moving average. The EMW, the Wilshire 4500, we're still short this little position here. The reason being we are very, very close to the 50-period moving averages right here, this red line. And this is where you want to be going short. And we're also noticing that this little channel formation that we were looking at was actually breaking down. We closed below that support line. That shows that we're breaking down there. And that's something to think about whenever you see these little signs like you should be buying. If the overall chart pattern is telling you you're breaking down, you don't want to be buying that, even if you get a little signal that looks good to you. This case here, someone I'm sure is out there, they're buying this, looking at the hammer candlestick formation, followed the next day, bullish day to the upside. They're looking at that as a buy opportunity. You may get lucky. In my personal experience, I wouldn't do that just because you're not actually oversold. You're just setting up a little bounce formation, but you're not actually oversold. You do have some supports that you'll have to chew through here. You've got previous resistance now acting as support in certain areas, and again, you've got this 200-period moving average that it's actually providing support once you've broken down below the 50-period. Now you're catching the bid at the 200-period. So there's some things that we have to chew through here, but again, I still see a major move to the downside coming. If you look at the longer-term charts, that is clear. So let's take a quick look at that. Quick look here at the Dow Jones Industrial Average 2-year chart. All the long-term charts of the U.S. markets basically look the same, so I'm not going to go over all of them for you. I've done that in the past, and we'll do it again in the future. But right now, this is the main thing that I'm looking at. You've got this candlestick formation from last week. This is 1 week's trading activity, and this is a continuation signal to the downside. Now, whenever you see this stuff, very bearish signal, look at this one over here. You see this previous very bearish signal here and the one that followed it. Each one of these are telling you to look for more selling. That's exactly what you got. You also notice that if you look really close, there's actually a small wick out of the top here. Same one the day before or the week before. Over here you've got it as well. You can have a couple of days to the upside in an overall bearish week and just erase it in a couple of days. So there's, really important that you don't look too close at, oh, we've had a single day to the upside, I'm going to get bullish. Look at the overall chart pattern, the longer term charts. You will see you've got a shooting star signal, you've got continuation signal to the downside, you've broken the major support line to the upside here, you're forming what basically starting to look like a head and shoulders formation. We've got the first shoulder formation, the head formation, and the only reason you broke out of that resistance line there was the Fed came out with QE3. You've rolled over back down below that level now. To bounce again would just give you the other shoulder. You'd be rolling back over and be looking very bearish. We've seen this all before. As if I've not painted a dark enough picture for you, let me show you just one more little detail here. This being a potential first shoulder, this being a head formation. If we come down here, bounce at this point, come up here and test and fail again, we will form an even larger head and shoulders pattern. There's just sell signal after sell signal after sell signal. Just horrible scenario in this market playing out or setting up right now. So that's important to keep an eye on. And that's, again, why I wouldn't even consider buying this market. If you've not been to the free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, enjoy the holiday if you're out in the U.S. doing the Halloween thing. And that's it. All right, see you later. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.